draw the ledger. Now we'll be going to this. We are still going to do another illustration. You know, this is only petty card book only, but we are going to do illustration on petty card book on the using petty card book on the Impress system. You know, this is just an ordinary petty card book, but you know, when we are talking about Impress system, I explained it the other time that it is a kind of system that it has the interval at which the cashier reimburses the cash flows that was given at the interval. It might be weekly interval or monthly interval. We are going to illustrate the question and see the way it definitely look like. So petty card book on operating petty card book on the Impress system. Now this is another information which is to cite examples on the Impress system. Ayodele operates the petty card book on the Impress system with a cash flow of 8,000. The following transaction took place in January 2011. So the same application, the same format still stand the same we did it the other time, which is don't forget it must have the heading which is Ayodele. We have the Ayodele petty cash book. So we have here receipt side, and don't forget we have a folio, we have a date, we have details, we have under here we have total, we have a voucher number here, then we have cleaning, and the information has been given. We have a cleaning, transport, we have a postage, we have stationery, we have a traveling, and we have ledger. So let's draw the column. Let's draw the column. So these are the columns. You see when the cashier has to reimburse the money, and we know maybe it is a weekly or monthly interval. Now they said it receives a cash flow of 8,000 naira. So here we write 8,000 naira, the same procedure. But the difference between petty card book only and petty card book on interest is the reimbursement, which do normally take place in the Impress system. Here we go. Now we have January 1, which is the balance BD. Don't forget to put naira at the top. It's very essential to put it, because those are the things that the examiner take into cognizance. Then information, here we go. January 2, we have the cleaning. Don't forget the same application, that is the same application we are going to use here. Likewise, we have 200 naira. Then January 3, we have stationery. Here is 100 naira. Then January 4, we have petrol. Don't forget, petrol is under transport. So then it is motor expenses, but here we are given just only transport, so it's going to be under transport. Then January 5 we have envelope, and the envelope is under stationery, so it should be under stationery, which is then we have January 9, we have cleaning. January 9 we have cleaning is 30 naira. Then January 10 we have closing, and the closing is supposed to be in the ledger account. So this is under, you put it under ledger, and that is 25 naira. Then we have January 12, sorry, we have postage, which is 28. Postage is 28. Then we have January 13, we have stationery, we have stationery, which is 42 naira. Then January 14 we have Lara, which is also under ledger. Let's praise it. How much is that? That is 60 naira. That is 60 naira. Then January 15 they have cleaning, is going under the cleaning columns. So then May 17, January 17, January 17 we have transport. Sorry, January 17 we have transportation, which is petrol. So you represent it with petrol, and you trade it down here, which is 110. So that is that. Then May 18, that is where we are going. Now, you know, I talked about the impress system, that it is when the cashier reimburse account. No, so the cashier was told to reimburse the account in May 19. So he or she will close the account before covering other expenses. So this is where we stop here. We add the total. We add this one. This is 260. I omit something here, which is I omit an information, which is let's trace it back to January 7, and that January 5. That January 5 is envelope, is under postage, so it is under postage expenses, not stationery expenses. Do you understand? So now we omit January 7 here, which is postage. Look at it. That is 770 is under postage here, so that it won't affect our figures at the end of the day when we are calculating it. So January 5 envelope we have 60, and January we have January 7 we have January 7 we have postage, which is 70. So now let's add this plus this plus this. That is we have 158. Now here under stationery we have 142. Here we have 85 naira. So let's add it here. The total, this is 200. This is 100. This is 50. This is 60. This is 70. This is 30. Then this is 25. This is 28. This is 42. This is 60. This is 30, and this is 110. Add the total, you will discover that it is 805. If you add the column and add the rows, you see that you still get the same figure. Now we want to reimburse it at the end of the day. The application we did the other time, you know, we still have some information. We still have some information like May 20, May 22, but we are told because this is an interest system, is different from that of petty cash book only. So we'll bring this one down here, 805, like we did the other time. So January 18, we write cash. So you bring the 8,000 like we did the other time. You bring it down here as a balance CD, which is 8,000. So add the two together, that gives you 8,805. Then add the other side also. We have, so this is the receipt side, this is a payment side, because you are disbursing. So this is the amount that was disbursed, 805, and this is the amount that was received at the month. So we are told to reimburse January 18. So here it goes. After that has been done, then we will now bring this one down like we did the other time. January balance BD, which is 8,000 naira. So bring it under here, or we also bring it under here depending on how. So now let's move on to the other information. So having done this, you know, it is done between the at weekly interval. So let's go on with the information. January 2020, January 20. We have traveling expenses. We have traveling expenses. So this is the amount that was we still brought it down here. So we have traveling expenses, which is how much is that? That is 100 naira. Now we have January 22. We have January 22. That is the postage, and that is 220 naira. Look at the column very well. Then envelope. January 23, we have envelope. Envelopes, that is under, put it under the postage. It is the postage expenses. So envelope is 110. So we have January 25, where we have cleaning. Put it, you trace it down here, you see it is 105. Then we have January 28, we have Ayo ledger account. So put it to, which is that is 100 naira. That one should be under the ledger column. So that is 100 naira. Now here we go. You still have two more information. January 28, 29, you have petrol, which is it will be under the transport expenses, which is 102. Last but not least, January 30, you have traveling expenses, and that is traveling expenses, that is 160 naira. Now let's add the total. Let's add the total here. This one has been, we've already closed this one, but this one has been we have reimbursed this one. So this is another fresh expenses, because interest is done on an interval. When you reimburse an expenses at intervals level. So this one is 105. This one is 102. This one plus this one, that is 230. This one plus this one, that is 260, and this one is 100. If you add this one, bring it down here, the total 120, 110, 15. Then you have 100, you have 102, you have 160. And don't forget to write the voucher. This is voucher 1, this 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So continuation is 13, 14, 15, 16, 17, 18, 19, because that is when they issue an expenses, they will attach it with a voucher number so as to record the items and the amount that is involved. So it is a cashier that is authorized, so it will attach the voucher number in order to cover that expenses. So if we add the total, you get 709. If you add the total here, add it plus here. So this one is add this one plus this one plus this one plus this one. If you add the total, you have 797. So having done this one, what we will now do here is that this 797, you bring it here. 797, the same thing we did the other time, January 30. So you bring it here, then you bring this 8,000, you bring it under. This is January 30 as well. So that is a balance CD. You bring that under here. So when you add it together, you get 8,797, and you can also bring it here. It's the continuation. 8,000. You add it together, you get 89797. So that is how they operate petty cash book on impress system. You see the method that we use after it has been reimbursed. Then you continue, you reimburse it in the January 2019, the January 18. Then you follow the normal expenses and start posting the other expenses. At the end of the day, we got 8797. So that is how they operate impress systems. So you might be given the exam. If you are told to do cash book operating impress system, this is how you are going to do it. But if you are told to do it ordinary, like you prepared petty cash book only, this is how you are going to prepare. And if you are told to prepare ledger, you can go ahead to prepare the ledger. Even likewise this one, if you are told in the question to prepare necessary ledger, you can go ahead to prepare this ledger for the total of the expenses you put in therein. So that is the illustration on the petty cash book.